the rebalancing going to just take our 4-year cycle and throw it out the window?
Well, so the 4-year cycle is a fascinating one because of all the narratives that came and went over the last season, let's call it last cycle, the only one that survived was the 4-year cycle. Now, I find it amazing because I'll often spend some time just like plotting out different charts, and I'll need anchor points, right? I need to plot this from the top, or I need to plot this from the bottom and check different cycles. December and November, it's a top or a bottom. Always. It's just December and November, whatever it is. They just happen to be tops and bottoms. The halving's always been like April, May. It's always in that kind of middle realm. Like for whatever reason, Bitcoin just has a 4-year cycle. And it depends who you ask, right? Some analysts will be like, yes, they print money and they do M2 grows and blah, blah, blah on the 4-year cycle. Others will say, no, it's the halving, it's the supply. And it's like, well, in many ways, let's go back to my 2019 example. I know the halving is coming, and I also know the money printer is coming. So I express my view by buying Bitcoin all the time. And at some point, there's going to be no sellers, right? It's just the nature of the beast. So the 4-year cycle is both something that we all do because we believe it's going to happen. It's like this self-fulfilling prophecy. If there is a time for it to break, it's going to be now. But that's what everyone thought last cycle. Everyone was expecting 100K, stock to flow model is going to work. Miners won't go out of business because they're publicly traded. All of those things were false. And they all said the 4-year cycle, the super cycle, 4-year cycle's over. That's the only thing that keeps ticking along, right? The low was set in December, and here we are with the halving coming up in April.
All right. I'm very pleased to introduce my next guest, Checkmate. Welcome to the Why Bitcoin Show.
G'day, mate. It's great to be here. Thanks for having me on.
Very pleased to have you. I must confess, I know very little about on-chain analytics, and being a non-engineer, my brain doesn't work that way. So I like to look at some very basic stuff, and I go, ultimately number go up is sort of what I'm always hoping. But I think we had a really good chat at Murrah, and you confirmed what I was hoping, which was effectively there's so many different metrics you can look at, but there are probably, let's say 20% of the metrics can tell 80% of the story. And I'd love today to unpack some of that stuff. You did a great video towards the end of last year. And I watched that in preparation for this discussion, talking about some of the key metrics. Obviously now the ETFs are out, 2024. So I want to hand over the stage to you, and you can feel free to just run wild, man. I'd love you to just tell us, like, what is the state of play? But wait, before we do that, I have something else. You told me something interesting at Murrah, and I thought this was something I'd not heard before. What did you call on-chain analytics? Like, you've got like a phrase that you call on-chain.
I mean, shit.
Is it like the heartbeat or something?
Yeah, no, well, it depends. I mean, it's astrology for men, depending on who you want to ask. But it's essentially the heartbeat of both Bitcoin and Bitcoin investors, because at the end of the day, right, every single decision that you and I make is in response to how we view the world, right? Some of those decisions happen to use the Bitcoin chain to express our opinion. I use the example of 2019, right? Back in that old world that all of us kind of remember in our archive history. I was looking at the debt situation. I was looking at the government spending. We didn't have COVID. We didn't have all this money printing as it kind of stands, but it looked like it was going to go there. And I was buying and storing my wealth in Bitcoin back then. So my decision is baked into the ledger and a whole bunch of 2019 and 20 and 21 and 22 UTXOs. So if you think about that, right, Bitcoin has its own heartbeat, mining, the hash rate, the difficulty, the blocks coming through, the transactions included in them, the mechanics. And then there's also who created those hashes, who sent those transactions, who bought those coins, who sold those coins. And every single time you touch the chain, you're leaving your fingerprints on your decision. And what a lot of people don't seem to grasp, it's beautiful, it's so elegant, is go back and read Reminiscence of a Stock Operator, right? This guy back in the 1920s describes how emotions drive investors. And all on-chain data is doing is extracting those human emotions and saying, look, all of these guys who bought the top held all the way until FTX freaked them out and they sold everything, and they all did the exact same time. And you know who was on the other side of that trade? You and me, because we understand why the hell this asset exists, right? So it's that smart money versus dumb money process. And some of those dumb money people, they're gone. They won't be back until the all-time high. But some of them, when the market goes to 22, go, oh, fuck it. You know what? I was wrong. I still can't stop listening to these bloody podcasts. I still love this asset. I'm back in. So they become the hodler for the next cycle, right? So
Mm.
anyway, that's kind of answering that last question there. But
I love that. I absolutely
yeah,
love it
it's
because
psychology. It's us.
but unlike any other asset, to my knowledge, you can actually get that insight. I mean,
Agreed.
when we see stocks going up and going down, we're not really familiar with who's behind it. I mean,
Yes.
we you know, I suppose a lot of it's algorithmic trading and that sort of thing, but yeah, that's really
Well,
the
by the
magic
way,
of it.
it's algorithmic trading for Bitcoin as well. But you've got to remember that there's kind of two components, right? There's the machines that are doing all their bits and the trading strategies, and in many ways, that's the liquidity. So a good example of this, people often say when I talk about like market bottoms, I'm like, look at all these people who sold at a loss, and without fail, there's a dude in the comments being like, nah, bro, it's just tax loss harvesting. And my response is, yes. Do you tax loss harvest in a raging bull market? No, bro, you tax loss harvest when you're down a fat penny. So you making that decision to tax loss harvest, yes, there might be some December seasonality to it. But you know
Yeah.
what? December's not the tax year for everyone, right? So people will make these decisions because they're in the red. And when they're in the red, there's a whole bunch of other people in the red. So the machines and the algos, they create the volume, they create the buying and selling, the tit for tat. That's why billions of dollars trade and Bitcoin can go up, you know, $2 billion can trade and Bitcoin can go up 5 cents, 10 cents, 20 cents, $5, right? Which is small, not billions of dollars of market cap. The
Mm.
volume is much bigger. It kind of keeps the thing stable, but it's all those human behaviors around the extremities that actually paint the picture that we're looking at here.
Yes, absolutely. Okay, sorry. So I had asked you a question and then I wanted you to jump into the heartbeat. We've done the heartbeat. Let's
Yes.
go back now to the state of play. You know, you're almost like Anthony Albanese giving a speech to the nation, telling us
Jesus, what are
about
you?
what's
You're trying to
happening to.
insult me. You're bloody putting me in the shoes of politicians. Fuck me.
Oh
This is
dear.
tough.
But you're kind of you're doing a state of the nation address. You're telling us, all right, this is what's happening on chain. This is what we've seen. So perhaps touch on some of the highlights that you saw in 2023, some of the turning points that you saw, and then what has transpired in this. Let's give it, in the first little bit here in 2024 as we're recording January 15th.
Yep. No, great question. So there's two angles here, right? So 2024 has already been a bit of a roller coaster year. I actually just finished writing a report for Glassnode this morning. So I've kind of gone through the numbers of trying to work out what the hell happened this year. And the short of it is we've essentially done a big round trip to end up exactly where we started. So were the ETFs priced in, right? And I put a line in there where we talk about, Bitcoiners love to debate, is the halving priced in? Is next Thursday priced in? It's like, we're always debating whether it's priced in. Well, we had the SEC get dragged into Bitcoin's world with some false tweets, some compromised Twitter accounts. You know, we had a
Yeah.
false start where people ripped the SEC's actual approval notice before market close. The market ripped to 49K. It sold down to 40K, and we ended exactly where we opened the year at 42,000. So was it priced in? It was priced to absolute perfection, right? We are flat year to date. Now, on the on-chain side of things, and this is another thing a lot of people say, yes, I specialize in on-chain data, but I also look at the futures markets and I also look at financial data and I also look at macro. On-chain just happens to be where I kind of distill a lot of my insights because everyone else is doing all that other shit. No one else is doing the on-chain stuff, but
Mm.
I use all of it, right? Because I try to be a good analyst and just pull information from all over the place. So anyway, when we look at what has happened, I think there's probably three stories to tell here. The first one, I'll just be really high level. From FTX up until October last year, I would define that as a hodler dominated regime. For the most part, very spot driven. We saw, yeah, derivatives were there, but not really kind of driving the market. Derivatives got flushed out, a couple of short squeezes, a couple of long squeezes, right? We had a sell off from 29 to 26 in August, some bits and pieces, but for the most part, it was just really, really raw spot driven demand. So under 30K, which there's a number of models that we look, pricing models. One of them from that Coin Time Economics report we did, kind of below 30K is where everyone was underwater by and large. Everyone had a couple of coins that they bought higher than that level.
Mm.
When we got above 30, most people are now break even or higher. Most people who stuck around in the market actually are now in profit. So that's the first thing that changed breaking above 30K. The second thing that changed is new money started to flow in. And by new
Sorry, and when
money,
did
I
that
mean
happen there, Checkmate? That was October.
October,
Yeah.
October. So
Okay.
the wheels really started spinning on this bull market when that October rally broke through 30,000. So
Mm.
if I describe FTX all the way up to 30,000, that I would call an uncertain recovery. The market was like, oh, a bit of PTSD. Fuck, are we going to go back down? Are we going back to zero? There's people saying it's going to 12K. It was really, really strong rally, but 150% just over the course of a year. It was a very resilient and stable rally. Once we busted above 30, we went to 45, right? We essentially did the same move that we did from 20 up to 30 in a handful of weeks. So suddenly we've basically doubled again, right? As we rip through that level at 30K. And
Mm.
not only that, lots of bigger money started to come in, new money. So I would say that breaking 30,000 was a real pivot point in that it changed the market from an uncertain recovery to what I'm going to call an enthusiastic bull, not a euphoric bull, but an enthusiastic bull. And you probably felt it in the
Mm.
sentiment, right? Things just kicked up a gear and people were a bit more excited. It's like, oh, maybe this actually isn't just a big bear market rally. And we've also seen leverage start to climb, but some of that leverage is on the CME, right? These are regulated. In fact, the CME future is now bigger than Binance. That is a major flip.
Wow.
The other thing that's really important is that the options market is now as big, sometimes bigger than the futures market. Now, that is a significant shift because, I mean, I trade options here and there, but that's because I'm interested in financial markets. I don't know how many people on Twitter would even know what an option does. I would say
Mm.
very, very few of them.
I'd
They
say
are
so.
just they are just a more complicated asset, and that's where Robinhood make their money, right? They're like, look at these fun little tokens you can buy, and they just go up 100x or they go to zero. Options are a maturing asset, right? Bigger money, more sophisticated trades, more hedging. The market is evolving, right? CME is bigger than Binance. Options are now as big as futures. New money is starting to flow in. October to now has been a real growing up phase of Bitcoin is now on the scene. It's real.
Mm.
And now we have what I'm calling the end of the beginning. The ETFs going live is the end of Bitcoin's 15-year maturation phase. It's gone from an adolescent to an adult. It is now out there in the big boy world, and it's going to get attacked from Wall Street. It's going to get attacked from governments. It's going to get accepted by governments. It's going to get accepted by Wall Street. It's going to get shilled and shat on left, right, and center by all of these big entities because it's on the big playing field now. And it's now, I mean, it's the 10th biggest asset in the world. It's now on its own 2 feet, and we're going to have all sorts of weird and wonderful debates about what do ETFs mean? Are people shorting this thing? Is there leverage here? Is there? It's going to become such a fascinating market to analyze. But that's my kind of general view. We've left the beginning of Bitcoin's life,
Yes.
and we're now in the next level, next phase of it.
Brilliant. I couldn't agree more, man. It's so weird to think, and I haven't been in the space for too long. This will be my fourth year. And to think of where we were 4 years ago relative to today, and you see BlackRock have got it on their home page, the
They're
Bitcoin
advertising.
ETF. It's like, what is going on? What is going
Yep.
on? He was calling it an index for money laundering in 2017. It's like,
They're
and
actually trying to signal. I saw their ad. I think Eric Balkunas from Bloomberg, who's
yeah,
done just a phenomenal job covering it. He retweeted their ad, and it's just this like boring ass dude in a semi suit, just
yeah, yeah,
describing the Bitcoin is very safe and stable, and it's
yeah,
great for your retirement
exactly.
account. And you're like, God, I mean, this is so boring. But this is what this is BlackRock, right? Biggest
Absolutely.
asset manager in the world is marketing the corn. It's great.
This is their bread and butter. And look, of course, for us, Bitcoin is not your keys, not your coins, etc. But there was always going to be this idea that when mainstream came in, they were not going to grok that self-custody piece to the extent. And maybe, for example, you get a little bit of a taste of the action through an ETF. And then as you learn more, as it performs probably better than anything else you have, you go, well, maybe I should investigate a bit more. And then you start learning about this self-custody thing that the Bitcoiners with their laser eyes have been whinging about for years and years
Yep.
and years and years.
Well, and the other
Um,
side to it, right, is that the truth is that self custody is not going to be for most people. And all of these things provide optionality. The way that Bitcoin's issuance curve is actually quite elegant because most of the coins have been distributed. So, for the most part, the average guy has had every opportunity to understand, to grok it. Most people just won't get there. I mean, how many people do you think really follow every single ASX announcement for the stock they own?
yeah,
None.
No.
Like there may be a couple of guys who are like fascinated. It just doesn't happen. So most people aren't interested in dedicating their life to their asset, right? Bitcoiners are a weird breed in that we see that there's a lot more to it, but like this is just the nature of humanity. And I also love all the victory laps that TradFi is doing. They're like, oh, look, Bitcoin's already been captured. It's like, I looked at the numbers today. Okay, they got 28,000 coins. If you exclude GBTC, there's 28,000 coins. Oh no, we've been captured.
Yeah.
Like it's all
Yeah.
over, fellas. Pack it in. Like
Oh
throw in your
man.
cold cards. Like, come on, guys. Let's get a sense of scale here, right? 85% of the coins are held by the plebs. Plebs can be
Mm.
whales. Plebs can be. These are people who got in before ETFs existed, right? We're only talking about a million or so coins that still have to come out. So it's just a different ballgame.
100%. I mean, what is it like? 93.5% have been issued already.
Yeah, I looked at it today. It's about nine. It's just shy of 19.6 million. So
Yeah.
what was
Yeah,
that?
there we
1.4
go.
left to go.
There we go,
Over
man.
130 years or something. Yeah,
We had
good
plenty
luck.
of time to front run Wall Street, and now they're here. They're gonna get involved in the action. If you're just somebody who wants to get exposure to the price, and you can go, you can give a shit about any of the censorship resistance stuff and all that kind of stuff, and you don't care about 6102 because you don't think like that. It's not
No,
going to happen to you. Then that's fine. Maybe for us psychopaths, that's just totally inconceivable to give BlackRock custody of your Bitcoin. Well, it wouldn't be BlackRock; it would be Coinbase, almost as bad. But
yes,
um, but that's that. Okay, cool. So I tend to agree with you. I mean, here we are today on the 15th of January, and how things have changed. Muted price action. Perhaps let's talk a little bit about that because it's always so funny. I always have this incredible FOMO building up to something big whenever it's in Bitcoin, and then it's like a little like balloon that just
it's
deflates
always a
very
whimper, isn't it?
quietly, and you're like, I was on the blower to my dad, like, listen, Dad, this thing's no longer a risk, man. It's being de-risked. Larry Fink just said this and this and that, and I'm like, what are the objections? As if the next day it's going to go to a million. Oh,
Yep.
but people like him go, come on, son. I've seen this movie 2,000 times.
Yep.
So what on earth happened? Like, tell us what you saw, at least from an on-chain perspective.
Yeah, no, it's a great question. So there's a whole lot of complex dynamics. So I think the first thing that's certainly to me, I love when I see market dynamics that I'm like, oh, I didn't actually think about that. I've thought about it in isolation, but this concept of traditional finance, if you buy a stock, they normally operate on something that's called like T+3 or T+2.
Mm,
You'll notice you go and buy a stock, it takes 3 days for your money to clear, go to the exchange, go to the clearinghouse, the stocks to change hands. So now you've got this situation where some guy's buying and selling BTC or one of these ETFs. It takes 3 or something days for that trade to clear. You're getting numbers coming in from Bloomberg. They're all priced in dollars. Like, okay, but how many coins are moving around? Well, it depends what the market makers are doing. And it's just this whole circus of like, God, this is inefficient. Like, it's just that
oh,
there's so many, like, you've got to give huge amounts of respect to even the Coinbases, right? The exchanges that have kind of pioneered the Bitcoin space, they have built all this infrastructure. They don't have clearing houses. They don't have regulators to sort this stuff out. They had to build this stuff themselves. Even our futures markets, right? The BitMEXs of the world, they had to build their own liquidation engines from scratch. And that's where the perpetual future came from, right? These things didn't exist. They will, by the way. Perpetual futures are absolutely going to make their way into TradFi because they're a fantastic vehicle. But
mhm.
anyway, we're kind of seeing like all this infrastructure. It's two worlds butting heads. And I think that I loved the way, I think it was the most Bitcoin thing I've ever seen, the way that Bitcoin dragged the SEC into the mud with it and said, you want to approve me? You're doing it my way, right? You're going to have your account compromised. You're going to have price whipping up and down. And then the absolute creme de la creme is everybody who bought the ETF is now down 18% because Bitcoin's like, I'm volatile, let's go, and just rips it all the way down, right? So the
Totally.
dynamics at play here, you've got GBTC, which is 600 and whatever it was, 620,000. By my, I forget the number. I think it was something like 23,000 or half a billion, right? Of half $500 million of outflows from GBTC. These are customers. This is going to keep going for weeks and months, I would suspect. These are customers who've just hate GBTC. They want to move to a lower fee ETF. They want to just get their coins out. Some of them may be allocating to other ETFs. Some of them may be buying spot. Some of them may be just going, I hate this Bitcoin thing. I'm never doing this again. There's a whole lot of reasons why GBTC is going to be this big reshuffling problem for probably for weeks to months.
Mm.
You've also got, I think it was about 28,000 BTC went into these other ETFs. So there was net buy side, which is great. I believe that on the volume, traded volume basis and on asset inflows, they were historically significant. So volume, I think it was the biggest in the world. So, Bitcoin broke records. But the problem is you're splitting all this stuff over 11 or 10 ETFs plus GBTC, which is already a product before it was an ETF. So like the mechanics
Mm.
of this whole thing, it's not like a clean situation. Then you've got T plus three. So the coins move at a different time to the trades and they got to do it at closing basis. And then you've got weekends where Bitcoin keeps moving and the traditional
Yes.
finance market. So it's just a world trying to like reconcile itself. So it has been a real circus. There was leverage building up into this event. So we've seen, as I was saying before, futures and options hit multi-year highs of 617 billion or whatever. So there was a bit of leverage that got washed out. A lot of people bet very long into the 49 peak and lost it all, right? Which is as typical.
Yep.
And the other thing, the final piece of the puzzle is long-term holders, right? These are like in the on-chain world, people have held their coins for at least 5 months. And the reason we do that is statistics, right? Basically, they're less likely to spend. We hit a level where in 2012, in 2016, in 2020, we hit a level on their kind of profit level where they kind of are in enough paper profits. We were talking about this before,
Hmm.
that they always start to spend just a little bit. And we had about 75,000 Bitcoin by these long term holders get spent. Not all of that sold. Some of them may have got moved around. Some of them may have, it's complex, but we're at a level where people start to go, yeah, 55%. Maybe I'll just de risk a little bit. Maybe I'll sell a little bit of the news, not the whole news, but a little bit of the news.
Yeah.
So you see some of it's a big complex mess. And this is why, like, I put out a tweet just before the halving, in my opinion, was priced in because we're literally flat on the whole year, right? Even though it's only the 15th, we're flat. We're flat on the year, but how long is it priced in for? And that's the big question I think a lot of people don't get. It's like, how long for? Because in my view, the second that these ETFs start trading, it's a whole new world. No one can predict what kind of inflows they're going to see. No one can predict how many people are going to spit the dummy over GBTC. Some people may just stay there, right? Some traders may prefer GBTC because it's got the liquidity and the size, and that's what they need to put on, $500 million positions or whatever it is. There's all
Mm.
sorts of stuff. There's all sorts of mechanics that you just can't predict. So we're kind of in the
Totally.
uncharted world.
How exciting. I know,
It's great.
absolutely. And we're the small group of people that are really just following like every sort of little update. The average person, it just hasn't quite registered yet. But yeah, to your point, I mean, there are quite a few things you said there. Firstly, you got all these different ETFs. So from what I understand, there's only going to be a handful of winners at the end of the day.
Yes.
And so it's really initially, it's like, how are we competing? We're going to compete on fees. We're going to donate to devs. What are we going to do? It's all very fascinating. Okay.
One way to make sure that you do lose is call your ticket DeFi. That's a guaranteed way to go to zero. Good luck to
Yes.
good luck to them.
Yes. Say goodbye to retail for that. And then, yeah, to your point earlier, GBTC, they've got a 1.5% fee, which you think to yourself, that's not competitive, but they might just be catering to the traders, as you say. So they don't care. So people are
They've
going
done
to
the
pay
calculations.
1.5%,
They've
and
done the
they'll just go,
calculations based on
yeah,
like if we drop to 0.25%, are people really going to stick around? But they're like, if we stay at 1.5 and we lose like 30% of our customers, we're still going to make more money than if we drop our fee by 90%. So
totally.
they've done the calculations. They've just worked out, let's lower it to just enough that we can still fleece people and get money.
Yes, and then you've got this sort of T plus 2 or 3, as you say. What's going to happen on the weekends? Then the question is, okay, you got all these independent financial advisors, and so there's people who are going like, well, now the floodgates are open. It's not as if these advisors were sitting on the sidelines going, I can't wait for this thing to be approved,
Chomping
and
at the
then
bit.
suddenly let's smash by. It's
Yeah.
like I feel like it's going to be a trickle. And
Yep.
I don't know what was making me think it was going to go do a God candle before. I feel so wise, like maybe about 8 days later. But now I feel like it's going to be like a trickle because, okay, you're going to see this interest continue. You're going to see, I think, people continue to sell on GBTC. The question then is, at what point will they stop? I mean, the people with the biggest gains are going to have to stomach the biggest taxable event. So they're going to be like, oh, that's a bit of a punch in the face. So you got to weigh that up there. And then, yeah, over what period are we going to see ultimately the demand, it gets soaked up? And at what point will it be saturated? it's a really fascinating time, and I think anyone who's pretending to have a really good idea of where it's going, I reckon it's probably just
Oh,
lying.
totally. You're absolutely right, right? These financial advisors, the way that I've been thinking about, a lot of these guys, many of them will have just gone from, I've been calling this thing a scam and writing it off because I've never had to worry about it. It's never been in my catalog of things I could offer. So I say, I don't care. It's not important to me. They now have to form an opinion on it. And that's going to take a long time, right? It's going to take time for people to go down even the first rabbit hole. And you and I know that these rabbit holes just keep going. And it's not a normal asset, right? Bitcoin is not a normal animal. It is a very, very complex problem. As simple as it is, and this is what I love about Bitcoin, it's so simple and elegant that it's the most confusing thing and complex thing for people to understand. It's just this
Mm,
beautiful dichotomy of like simplicity and complexity at the same time. It's philosophically complex, even though it's actually technically quite simple. And it's going to take a
exactly.
long time for these guys to fully wrap their head around it. But now the difference is going to shift from the career risk is, oh, you allocated to it and this volatile thing went to zero, right? It's now switched to, why didn't you tell me about it? Right? Why didn't you allocate some of this? Why didn't you put 1% in? And that's the other thing, right? People are going to allocate 0.5%, 1%. And then Bitcoin's going to go to 5% as it does. And they're going to have to rebalance. They're going to have to sell down every quarter. So we're going to get these like seasonality flows start to come in on top of the hodlers doing their whole DCA thing. So you're going to get all these like
What does that do
weird
to
dynamics.
halvings? Do you know what I mean?
Oh, it's
Like with the
beautiful. I
4-year
love it.
cycles,
Yep.
like is the rebalancing going to just take our 4-year cycle and throw it out the window? I
Well,
mean,
this so the 4-year cycle is a fascinating one because of all the narratives that came and went over the last season, let's call it last cycle, the only one that survived was the 4-year cycle. Now, I find it amazing because I'll often spend some time just like plotting out different charts, and I'll need anchor points, right? I need to plot this from the top, or I need to plot this from the bottom, and check different cycles. December and November, it's a top or a bottom. Always. It's just December and November, whatever it is. They just happen to be tops and bottoms. The halving's always been like April, May. It's always in that kind of middle realm. Like for whatever reason, Bitcoin just has a 4-year cycle. And it depends who you ask, right? Some analysts will be like, yes, they print money and they do M2 grows and blah, blah, blah for
mm,
on the 4-year cycle. Others will say, no, it's the halving, it's the supply. And it's like, well, in many ways, let's go back to my 2019 example. I know the halving is coming, and I also know the money printer is coming. So I express my view by buying Bitcoin all the time. And at some point, there's going to be no sellers, right? It's just the nature of the beast. So
mm,
the 4-year cycle is both something that we all do because we believe it's going to happen. It's like this self-fulfilling prophecy. If there is a time for it to break, it's going to be now. But that's what everyone thought last cycle. Everyone was expecting 100K, stock to flow model is going to work. Miners won't go out of business because they're publicly traded. All of those things were false. And they all said the 4-year cycle, the super cycle, 4-year cycle's over. That's the only thing that
super
keeps ticking
cycle.
along, right? The low was
Oh
set in
my.
December. And here we are with the halving coming up in April.
Speaking of the stock to flow, I don't know if you ever remember that RSI indicator, the relative
Oh,
strength
that's
index.
his only other model, isn't it?
Yeah, I mean, what
Yeah.
did you ever dabble with that? Like, what's your thoughts on that?
I
Because
mean, look, the stock to flow model is absolute bollocks. Just absolute. There is zero credibility to this model whatsoever. Don't get me started. Um, it, it,
I
it
love
it
it.
is the problem with it, right? The problem with the model is that it has been proven so wrong, and yet it is continually defended despite the fact that we all know this. And the problem is that it hurts people because it's just bad mathematics. There's no causality between it. So as a result, it is just dishonest, and that's really the problem that I have with it, is it's knowingly dishonest. The RSI, I mean, look, people have been using the RSI forever, but if you put an RSI in a yearly time frame and you say, look, it goes up and down, like, great insight, bro. Like, I'll see you in 4 years at the top, and I got 50 other models. Maybe we go back to the original question you asked of like which metrics actually make the difference.
Yeah.
RSI at least has some mechanics associated with price action, and price action is a derivative of human decision. So yes, the RSI is useful, but when you're doing it on monthly candles and just looking at it going from red to green and red to green, it's like, I mean, okay, you can do that, but there's a whole lot happening between those 4-year zenith and bottom, right? There's a lot of stuff going
Mm,
on, and
yeah.
that's where a lot of the excitement is.
Yes. Okay, fair enough. All right, let's sort of touch on some of these key metrics because let's imagine I'm just Joe Pleb and not a world famous podcaster with incredible on-chain skills. um, what are the key things I should be checking out? Let's
Yes.
imagine I just want to hop onto Glassnode Analytics and I just want to see like what's the state of the nation there, Anthony Albanese, or whatever the case may be. Like, tell us about the things that you're looking at that are most important that you think long term have proved to be the signal that plebs should
Yes.
be aware of.
No, this is a great question. So there's basically, look, I'd put it down to three core buckets. There's what I would call cohorts. And generally speaking, for the average punter, guys who just want to survive the cycle, you only care about two cohorts, long-term holders and short-term holders. So that's a dividing line about 5 months. As I said before, it's about statistics. That's why we put the line there. But essentially, the short-term holders are coins that moved in the last 5 months. That's the hot ball of money that's kind of following price. These are coins that change hands. And generally speaking, they change hands, then they change again, then they change again, then they change again, and then they find a hodler and they go offline. So they
Mm,
bounce around between people, and then gone. Now they're out in long-term holder supply. What happens during bear markets is the speculators go, the fever goes, all the momentum, it kind of just dwindles. And the only people who are left are the hodlers. So over time, that short-term supply goes down and down and down and down. And those long-term holders take the coins. Now, long-term holders, they are typically most active at market extremes. And there's three of them that really stand out. Market bottoms. And what happens at market bottoms is long-term holders, I mean, 5 months, bear markets go for a year. So the
mm,
guys who buy the top hold all the way down, they become long-term holders and they puke everything out at the bottom. So we call these the first cycle long-term holders. We've all
mm,
been there, we've all done it.
mm.
So essentially, those first cycle guys, they're present at the bottom. The second time long-term holders is present is when we break our all-time highs. And again, there's no guarantee this happens, but it has happened every previous cycle. And psychologically, it makes sense. The guys who then buy the bottom, right, off those long-term, those first cycle guys,
Mm,
they hold on to the coins. They see Bitcoin rally from 16K to 70K. Maybe they go, yeah, give me 80, give me 90. Now they start to spend. And they don't spend all at once. They just start to go, oh, take 5% off, take 10% off, take 20% off. And what you see is long-term supply stops climbing and starts actually decreasing. But there's enough demand coming in. Larry Fink's on TV. Michael Saylor's pumping the bag. There's people all over the place. Podcasts are going nuts. Bull market is when new demand comes in. And these long-term holders, they know this is happening. So they start to just lighten the load and they take profits and they go and buy themselves a car. They go and buy themselves a home. They go on a holiday, right? You've seen your money go up by 5, 6, 7, 7x. So the other time they're present is at the tippity top because that's when they essentially go, all right, things are really frothy, right? And you just look at the more cycles you go through, you're like, that's a top. You look at Twitter and you're like, that's a top. I can see like, shit coins are going through the roof. People are buying like JPEGs of, whatever it is. This is ridiculous. It makes no sense.
yes.
This will be over in about 3 months' time, right? And that's when they really start to sell. So the long-term holders are present at those extremes. The short-term holders dictate everything in between those three extremes, right? So that's
Mm,
cohorts.
yeah.
Now, we apply that cohort framework to the key metrics. Now, the key metrics are how much supply do they hold? How much of that supply is in profit or loss, right? What you're looking at there is how many coins have they got relative to the other team? And the
Mm,
other one is, are they healthy? Are they happy? Or are they pretty scared? Are they in a lot of profit or are they in a lot of loss? The other metric, and there's really two. The only two oscillators that the average pleb needs to learn. So learn about your cohorts and your supply, learn about MVRV, and learn about SOPA. Now,
mhm,
those two are actually sibling metrics, and they are, in my opinion, the most important metrics. You can also extract the cost basis for these cohorts from that as well, which is important. But essentially, MVRV is it's like an oscillator. It shows how much profit or loss they're in, right? That they're holding. SOPA is how much they're spending. So you've got the amount of profit that they're in on coins they still hold, and you've
mhm,
got the amount of profit that they're taking and actually locking in, either by fear and capitulating at a loss or taking a profit.
mm,
If you learn those buckets, that is essentially human psychology in a nutshell. Think about some of these combinations. Short term holders hold a huge amount of the coins. What does that tell you? Long term holders own very little. The smart money have exited and the dumb money hold everything. I don't want to be in the trenches with those guys, right? And then you also see that they're in a ridiculous amount of profit and the smart money is spending and locking in big profits. That looks like a top,
yeah.
right? The other side of the equation, when do you want to be starting to enter the market? When the smart money owns the maximum amount of supply, you've seen a massive red candle, all the dumb money and the long-term holders have all capitulated a massive loss. That's full scale decimation, bottom is in. So you kind of look for these like human incentive structure. What does the top look like? Dumb money hold everything. What does the bottom look like? Dumb money hold none of it, right? And you're oscillating between these two extremes, and that's kind of the
That's
crux of it
awesome.
all. That's all it is.
Awesome. Yeah, that makes sense. Because I suppose we try and gauge what's potting on Twitter, and we'll go like, there are certain, tops, as you say, where you're seeing like monkey JPEGs going for millions, or, when I think Paris Hilton was on, they're all unfunny, but those late night show
Oh yeah,
guys bragging about oh,
shilling
I'd
their
spend
apes.
$250,000 for this, this ape pick, and you're going like, what is going on here? This is fucked. And so
Yep.
I think those were the signs, and I imagine that must have been very close to the top.
Every
And
single one of the metrics that we just described was lit up like a Christmas candle when this was happening. So,
oh
and
man,
that's what I love about it, right? You just look at the Bitcoin chart and you're like, okay, I'm seeing like 15 of my metrics are all, lit up. I know Paris Hilton's on TV. I don't even watch TV, but I know she's on TV right now talking
mm,
about Dogecoin, right? You can
yeah,
guarantee it.
yeah. So, with that said, though, I would have imagined that these long-term hodlers are people who are just going for the ride, because that's been always the mantra, don't try and time the market or anything like that. Don't try and scoop profits, because you're effectively going to forego some sort of massive upside. But what you're saying is interesting. I mean, the patterns there are telling you that these people are. Would you imagine that these are people that have been in it for a lot longer? So, if your cost base is like $500, you're not going to have a heart attack if you're selling at 40, whereas you're less likely to try and sell if you got in at 20 kind of thing.
Correct. No, absolutely. And look, there's a lot of dynamics here. Some of those, and if you think about the long-term holder chart, I haven't obviously got this in front of us, but it's like a big wave that puts higher lows and higher highs. It's just continually like grading higher and higher. So at the top of the bull, when they've sold everything, right,
Yes.
they've got the minimum amount of coins. That minimum is always higher than the previous cycle minimum. Much the same as the price chart. We continue to go higher. We get to these new plateaus.
Mm,
Now, there's no question. I think you're absolutely right that, I mean, if I describe the typical cycle, which is probably my cycle, I got in 2018. I bet on shit coins in 2018. I lost everything twice. Then I finally learned about Bitcoin in 2019 and just got, okay, it makes sense. Now I'm going to start accumulating. And I was in the mindset you described before. I need to just hold this thing forever. As I go into 2021, that was actually my first bull market. I mean, 2019 was kind of a bull, but really 2020, 21 was the first bull. From that point on, I was learning a lot about this stuff, and I got UTXOs from 50,000, but I got a lot more at 20 and I got a lot more at 10, right? Because
mm,
back then is when I was learning about it. And, I'm still going through that process of learning like how the market shifts and moves. Now that I've been in the market for 6 years, this cycle, if it gets to I mean, I'm not in any rush to take profits, but if it gets to a big number that's life changing, yeah, I'll take 5% off and change my physical life, right? I will
mm.
I'll convert it into a house. I'll convert it into some kind of lifestyle change because it's my savings and that's what I want to do with my savings. But I think you have to go through multiple cycles before you're willing to let go because you actually need to stack the bag. You've got to get enough coins that you're like, I'm happy with my life's work, right? It's that nest egg that you're willing to get to. So I think that's a big part of it. So yeah, you got to go through a couple of cycles. You got to learn the momentum. And maybe on your second or your third, you're like, I actually know what a top looks like now. I'm not buying the top. Even though I did
Yeah.
it in the first cycle, I did it again in the second cycle, not as bad, but certainly still near the top. And here I am, like, I can see the top. All my metrics are telling me when the top is. It's not now. So I'm just going to sit tight. When it shows up, I'll probably let it run for a little bit longer because that's what Bitcoin does. But I'll slowly start to exit when all my metrics are lit up. I'd be a fool to not listen to my own advice.
Okay. Well, I'm going to give you a call in. Okay.
I mean, there's websites that do this.
Because to be honest, it's like obviously I feel perpetually short, but at the same time, I also do know that if there was some sort of silly price action and I had an opportunity to sort of just take control of my life and do whatever I want and pursue my dreams,
I mean,
I'd
Bitcoin is a savings technology. What are you going to do
yeah,
with your savings? Change your
that's the
life.
point. But I'd also do so knowing that I might be leaving a lot of money on the table. I might be foregoing some even bigger returns. I suppose that's
And
just
that's the
the
thing, right? I mean, I think the best way to think about it, right, is you're trading Bitcoin for something else that is scarce, either in a physical sense, like
yeah,
property or gold or whatever it is that you want to actually reallocate to, or you're buying something that money can't buy, which is life, right? And both of those two things are worth spending your savings on. That's the frame of reference, right? You're spending it on something that's worth more than the Bitcoin at that point in time. Happy days. The most important thing is not to get shaken out by using too much leverage or doing some stupid futures position, because then you're spending it on just a bad time, right?
yeah.
And no one wants to lose your coins doing that. And it's so easy for people to do, especially in bull markets, because you think it's easy money. It's not. The hardest thing is doing absolutely nothing. It's the hardest part of investing.
Oh, it's so true, man.
Because
Exactly.
you know it's $1 million, right? You know
Y-
it's worth $1 million. This is
yeah,
like just very simple mathematics of being like, okay, it's better than gold, so that's 500 or 600,000. It's twice, it's like 10 times as good as gold. So like, is it 2x above gold? Easy, yeah, it is in the grand scheme of things. So like $1 million a coin is very, very. It's like, it's not a stupid number. It's very feasible, but not
absolutely.
tomorrow. Not tomorrow. Probably not the day after either. But at some point, and that's the hardest bit. You got to wait and wait and wait until it gets there.
100%. Yeah, exactly. And you never want to be a forced seller ever, because
No,
that's the absolute worst.
in anything.
Yeah, it's an absolute awful situation, and I've been there. Obviously, that
I
you need
think
to pay
actually,
your
I'll
school
take one
fees.
thing back. I think you have to be a forced seller for like, you got to lose 2 grand or 5 grand. You have to lose it in
Yeah,
a
yeah.
fire sale somewhere, because then you know not to do that shit again. You
Oh,
have to
dude,
touch the
totally.
stove.
I I thought I had a trade on that I thought was genius. You know, there were these wonderful companies like BlockFi that let you borrow against your Bitcoin so you can buy
Oh
more.
no.
It's so obvious.
Yeah.
And obviously it goes against you. And then it's like, hey, buddy, you need to put up a little bit more Bitcoin or clear this out. And I just had a heart attack, cleared it out with everything else we had. And I was like, oh God, that sucked. It did not work. And yeah, it's just pretty much, yeah, a lesson
It's a
learned.
tough road.
It's,
I
it's,
my stove touch moment was actually with options. I mean, I've had a couple of them, but basically, I was learning about options, and this is back when I was getting into on-chain data. Basically, the 2018 bottom, I was
mm,
learning about Bitcoin and options, and I just fascinated by them. And on the 2019 rally, we went from 4K to 14. On every pullback, I was selling put options well below like 6,000, right? So well below the level, and basically collecting the premium. And I was selling 1 year dated options. So I was willing to carry them. I'm like, this thing is going to go. I can see it moving. We got to
mm.
14K, and all my positions, I was up, I don't know. I basically made I think 80% of the gains I was going to make. And I held those damn things to get the last 20% of the lemon. I held them all the way through 2019, all the way into 2020, and then got forced closed out when March 2020 happened. So
Oh boy.
I was literally, I mean, I literally held those things at all the levels, all my on-chain levels were like, it's not going to go below here. And it didn't close below that level, the realized price, but it wicked below it. And then it came straight back. So within the matter of just that volatility squeeze just blew me out. So that was a painful lesson, but one that I carry with me as a scar.
Totally. No, there's no easy lessons. That's the whole point. Hey.
Yep.
So when you look at the different cycles, so I sort of round out the discussion on price action and on-chain stuff. When you think about sort of now where Bitcoin's going, we said like I feel like $1 million like is guaranteed at some point. I mean, it's just a question of when, not if. Just given the nature of this asset relative to other types of assets, it's like it's got all these other great qualities, etc. Do you still subscribe to the notion of diminishing returns, which we've seen thus far? It would
Sorry, you cut out
seem.
there. I
Oh,
literally missed the question. Just
oh.
go that last section again.
Do you subscribe to the notion of diminishing returns when it comes to
No, I
Bitcoin? Because we've
don't.
seen
I
that.
don't actually. I think that's another narrative that's going to get a knock on the head. I think that the diminishing returns is, I mean, based on what? It has the same credibility as we're never going to go below the previous cycle all-time high, which we did, right? And we took out the 2017 high. There's no reason for this to be the case. I mean, people forget that we have 1.4 million coins left to be mined. We have 6 years, I would say, of some of the most developed Bitcoin education in the world that has got long-term holders at all-time highs, just sitting tight, doing nothing. And we've just opened up demand to ETFs and every financial planner under the sun. And people think that when we couldn't possibly ever have a cycle that eclipses the previous one. I mean, on what basis? I mean, to me, there's the sky is the limit at this point in time. Like there are just no coins being relinquished to the market right now. So I don't see it. I think that the diminishing returns has no basis. It's a fun meme, but I think it's not one that's going to get taken out.
Right. Okay. And when you're thinking about this year now, a lot of people have also said that typically what you see is the halving, which we know is going to happen in April, and subsequently we've seen that each cycle the top has been reached earlier, if I'm correct. And there's people who are saying like
Always in
we might,
December.
yeah. So if you were to say, and obviously there's no certainties, there's only probabilities, and now we've got the suits involved, and who the hell knows what happens with them, like for better or worse. Where do you see this top going, and when would you see that happening in your estimation?
Yeah, it's a great question. The answer is I have no idea. I have absolutely no idea. And one thing that I do kind of play around with is because of all this rebalancing and the size of the money and all the market making that's been going on, I think it's possible that we have. I mean, 2023 was a great example of what I would call a very slow, healthy, methodical, but still bloody impressive rally, right? We went up 130%. And it was just, I mean, people were scared the whole way along. It was beautiful. It was just this long, slow grind of just, I mean, we didn't even give back 20%, right? It's my favorite chart right now. We
Mm.
haven't had a 20% drawdown from whatever the top is since the FTX bottom. The market has not pulled back more than 20%, which is kind of impressive. Even the sell-off from 49 down to 40 was 18%. So we're still not at 20.
Wow.
Most cycles we get down to like 23, 30, a couple of 50s, have a 2019 style where you go down 60%, 70%. Like this is normal. What we're seeing right now is not normal. It's not normal. And that's actually really bullish because who's buying to stop this price from going down more than 20%? It'll happen, right? At some point we'll get a deeper correction. But then we just enter the world of Bitcoin that we all know and love. A lot of people don't realize how resilient this market has been. So the foundation that's below us, I think, is very, very robust. And I spoke about this actually when Pete McCormack was in town on that What Bitcoin Did pod and also the live show.
Yeah, that was
Um,
awesome, man.
yeah, just this chart that basically looks at shrimp all the way up to like basically people under 10 Bitcoin. And it shows the 30-day change of how many coins they're accumulating. And we compare it to issuance just because it's a nice, easy benchmark, right? How many coins are mined? How many of the shrimp buying? Basically, they bought the top in 2017. This is me in such unbelievable style, just this massive buy side, just stacks and stacks of coins. We
Mm.
never got even close to that level until Luna blew up and 3 Arrows blew up and FTX blew up. What kind of maniac is buying coins, little guy, buying coins when all that news cycle is going on? Bitcoin was dead for a decade,
Mm.
was the narrative. And yet these crazy guys were just buying that bottom. To me, that chart is Bitcoin's education. People have learned why and how to hold this thing. 85% of the coins are held by these crazy people, right? I mean, where are the coins going to come from? Because we're not going to mine them fast enough for the amount of demand that's going to come in from baby boomers and retirees and asset managers. There's just not enough coins. So, like, who knows where this price goes? The rebalancing stuff could make it a much slower, more methodical cycle. The truth is, what I actually love about my job is that I just don't know the answer, but I'm there to try and like chart it on the hard right edge and actually find out where the market goes and just have my tools telling me as best I can where things are at. Right now,
Mm.
things are, yeah, they're a little bit short term overheated, but we're not like steamy, right? It's very much an enthusiastic bull. We're not in euphoric territory just yet.
Wow. Yeah, it's so true, man. It's like things have changed so dramatically. If I think about when would we have hit 40, let's say 42, whatever it is today. When did we hit that in the last cycle?
We hit it in around, I think it would have been January. So January 2021 was the on-chain peak. And what I mean by that is that all the metrics that I described before about lighting up like a Christmas candle, that thing was an absolute firework. January was when all the long-term holders were just puking out coins saying, thank you very much. I'll take 40K every day. And a lot of
Mm.
that was GBTC. There's all sorts of stuff going on, but essentially that was kind of the peak. Now,
Okay,
if you,
that's interesting because
yes,
you just think of where we are now and the sort of
look at Google
maturity
Trends.
of the market.
Google Trends is basically at like not all-time low, but barely off the bottom. And we're at the same price as when Elon Musk and Tesla bought and the on-chain market was exploding, saying top, 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 it's over, right?
It's so
42,
funny.
42, two different
But
animals.
in December, I remember this quite well. I was traveling and I was in the airport, literally standing in line on a god awful Jetstar flight, ready to board. And I'm smash buying grands and grands at a time because I was just like, whoa, this thing's running. Whoa, it
Yep.
keeps going. And so you just see that you sort of euphoric, mad feeling in those months around, December, Jan. And here we are, and people are bored. And they're like, oh, I'm
It's
not
wild,
happy.
isn't it?
And it's
They're
like,
arguing over whether it's spam or not in the blockchain and the
oh,
mempool. It's like, guys, there's
brilliant.
just, I mean, it's is this really what we're fighting about? I mean, good Lord.
Good Lord. Well, okay. So I'm glad we touched on that because that is something that I've heard you talk about. And look, we don't need to go into an enormous amount of detail here, but let's just give us a TLDR. Well, I mean, TLDR is a sentence, so maybe more than that, please. But what's a BRC token? What's an inscription? What are the JPEGs? Those are the three categories, I believe,
Yeah.
that are causing fees to spike. Some combination of these things. And I've noticed it's weird, and maybe you can tell me why. There's been times when I've looked and I've gone, my God, on-chain fees are obscene. And I'm having a heart attack about UTXO consolidation to the point where I actually have to learn about what it is and how it
Yep.
works. And then the next moment, I'm like, it's $2 if I want it
Yes.
done right now. So what is going on
Hey,
here?
I don't mind paying the miner $5 to move my coins around. Thank you very much.
There
That's
we
the
go.
deal.
That's
Yeah.
cheap. Yeah. So
So
what's
look,
going
I
on?
think the so technically speaking, what inscriptions are, some clever cookie found a way to basically the Bitcoin data has for a transaction has two pieces. The transaction data, which is basically what are the UTXOs that it's spending, who's it going to, what's the all the details of like this is the transaction. And the other one is what's called the witness. This is what SegWit did. It split it into two data structures, the transaction component and the witness component.
Mm-hmm.
So the signatures is of proving who actually signed that is the witness. Some clever cookie found a way to put extra data inside the witness component. Now, a little bit technical, but basically at the data structure level, miners or the fee market considers the witness component at 1/4 the fee because basically the engineers never thought, hey, we're going to have all this arbitrary data in there. It was always going to be very small. But because people can now put more in there, you've essentially got people paying for putting images, JSON files, all this kind of stuff into the Bitcoin ledger. So that's the
So what is
mechanics
a
of what's going on.
JSON file? What the hell is
JSON's
that?
JSON's literally just a text format. It's basically like an array, right? You've got ticker equals, whatever coin,
Yeah.
supply max supply equals 1,000,000, mint limit equals whatever. So it's just like a series of lines, like a
Yes.
dictionary in Python or something like that.
Okay.
So anyway, it's like a common format for data storage. Anyway, so the context is people are putting arbitrary data into the signature component. Now, these are valid Bitcoin transactions in the way that Bitcoin is currently designed, which means every node is just processing them, miners are putting them in, so on and so forth. Now, I come at this from the perspective of, okay, we actually can't stop these. Some people want to filter mempools. And what that means is if you don't like this stuff, your mempool just does, you turn off, you're like, I don't want to see any of this shit. Well, my node's still going to see it and the miner's still going to mine it. So all you're doing is putting your head in the sand and being like, they're not there. They're not there. I don't see them. So your fee estimation is going to be garbage, whereas mine's going to be just fine because I see everything, right? So yes, people can filter it, but not really. They're going to get mined at some point in time, so it's just not going to happen. So I look at it from the perspective of let's understand them. And from all of my work, I've basically found that they are consuming about 20% of block space. They're paying about 30% of the fees. And strangely enough, this is by far the most intriguing one. When you look at transaction counts, because of this split data structure, most normal monetary transactions can't actually fill the 4 MB block limit. It's kind of theoretical because so much of it is transaction and very little of it is witness. Well,
Mm.
these guys have found a way to put more stuff in the witness. So you're actually able to use more of the block. So the other day, we hit an all-time high in monetary transactions, being like a classic coin from A to B, and an all-time high in inscriptions. The miners were able to fit more data in the same block, get paid more for it. And as far as node like stability, it's done absolutely nothing. My nodes are absolutely fine. The data footprint is barely changed. So overall, they're not really that it's an ideological thing. It's actually not really a technical, it's not destroying people's nodes. The network is not getting less decentralized. Overall, it's an ideological contest between people who are like, hey, this is a forcing function for new stuff on Bitcoin. And new stuff on Bitcoin is kind of exciting because no one changed the rules. No one had to do anything. Like, people are building stuff on top of Bitcoin because there's a capacity to do it, right? Now, the thing is, I don't know where this leads. When we talk about these BRC20 tokens, people are essentially inscribing one of those JSON text files, and it says, I have this many tokens. And then it says, I want to transfer them. And then you send that transfer to someone else. And people have built these indexes, basically just number counting systems that just look at the Bitcoin ledger and say, oh, he transferred those tokens. Oh, he transferred those. Bitcoin doesn't know anything about these tokens, but people have built a protocol on top that is literally using Bitcoin as a time chain. This happened before this. This happened
Mm.
before this. And all they're doing is saying Bitcoin is truth, right? So just take that simple idea. We have people who are now looking at fee markets and going, shit, we need to scale this thing, because we do. People don't know this, but if all 8 billion people wanted to do one Bitcoin transaction, how long do you reckon it would take to do that? 8 billion transactions, how long will it take to process on the network?
Oh God, no! I don't know. Bloody
67 years.
Jesus, yeah.
Doesn't scale, right? There is not enough block space for every single person in the world to have one UTXO. We're never going to develop the systems in time for that world. We're going to scale through ETFs and BlackRock unless we have a forcing function to say, guys, we've got to build this stuff. Lightning has struggled under these high fees. There's been a lot of engineering work put into it. I'm positive it has a future, but I don't think it's the future that everybody thought it was going to be. So we need to now go that next level. You need these forcing functions, and sometimes they're spam. Sometimes they're monkey dick JPEGs. And this is the other thing. The
Monkey dicks.
people love to say, oh, the first inscription is literally a picture of a dick, right? I mean, it reminds me, actually, when I was traveling in Thailand. I loved it. It was my first overseas trip. I would have been all of 19 years old, maybe. And yeah, I would have been. And I remember standing in Bangkok, and I was sitting there on a one of their monorail, their skylines, and I just looked over at this construction site. I was like, what is that? And it was this lime green fluorescent dick just painted on the side of a building. It's like, it's just a universal joke. So that's the thing, right? A lot of people complain and they kind of say, oh, it's all about monkey dick JPEGs. That's what's going on Bitcoin. Well, the truth is that most of this activity is actually these tiny little text JSON files, because the monkey dicks got priced out long time ago. Because in order to put a JPEG on there, JPEG's obviously a much bigger file size than a text file, right? You have to buy that block space. And if you want to buy a lot more block space at high fee rates, you've got to pay a lot more. It costs hundreds to thousands of dollars per image to put it onto Bitcoin at like 30, 50 sats per VByte. So to do a whole 10,000 collection of these things, it's just not going to happen. It's millions of dollars. So a lot of people just don't understand the problem. I come at it from a pragmatic perspective of, we can't stop it. So I just understood it. And at the end of the day, it's like, miners are getting paid a lot more. My node doesn't really care about it. There's very little technical thing. And the forcing function is that we're probably going to do a lot of innovation. And I love that. I want Bitcoin to be innovated on, because the best part about this, nobody needs to change Bitcoin for any of this to happen. Bitcoin just keeps doing its thing. You don't need to change your code to do anything. In fact, I think the biggest risk is that the people who are very ideologically opposed to these inscriptions, they are actually the ones who want to impose changes on my node. And I'm quite happy to sit here and go, well, everything looks pretty stable right now. I'm going to sit tight and just watch. There's no cause for emergency. I'm going to sit back and watch. I'll come back to me in 2 years. If it's still a problem in 2 years, maybe we can talk about a solution. For now, I'm going to sit back and observe.
Interesting. Yeah,
Let the
it's
fee
funny
market do
because
its thing.
I don't know anything enough about it, but I always was just of the opinion, like, look, ultimately the market is the teller of truth, and we'll know if whatever they're doing has any value whatsoever. And if
The
anything,
best thing to do is take $200 and just see what they do. Go and buy one of these BRC20s, go and sell it, go and buy a monkey dick JPEG. Just go and like spend $200 to understand what's going on, because you'll learn about how they're using PSBT, partially signed Bitcoin transactions. I mean, what they're actually built, it's kind of wild. They've built dexes that trade UTXOs. So you've got a monkey dick JPEG on 500 sats. I've got $100 worth of Bitcoin. I literally trade my $100 worth of Bitcoin for your 500 sats. We've just swapped UTXOs. Mine just happens to have a special stamp, right, attached to it. You've now got the value. Some people will say that's a grift. I'd also say that's a bit of a grift, but I was also a willing buyer. But at the end of the day, go and test $100 worth, because you'll actually learn about how the system works. And once you understand what's going on, you can have a much more rational judgment. I think a lot of the problem with Bitcoin culture is that they don't try the competitors. I've gone and used all the chains and they're all dog shit. The reason I know they're dog shit is because I've used them and I've like actually gone, these pitfalls, that's not going to work. That incentive structure. I'm an engineer. I
Mm,
like to tinker. And
mm,
by tinkering, you learn, oh, that doesn't work. That's not going to
mm,
make it. And you
mm.
also learn why Bitcoin is so powerful, because it didn't make all of those stupid mistakes.
Yes, totally. I'm just wondering, like, if we're gonna have this weird day where it's like, someone's like, I want my wedding photos on the blockchain, and then you literally, like, in the future, you go, oh, here we go. I'm gonna give my kids, this is the transaction ID or whatever
Yep.
the hell I need to give
I
them.
mean, my
Look at
my
mom
my
and dad.
15 my 16-year-old dog passed the other day, and the first thing I did is I inscribed a picture of him. So my dog Scruffy's on every single Bitcoin node in the whole world, and that's like, to me that was a great thing to do because he's everywhere now. Like, and no one can stop me. And
Rest in
I
peace,
just like,
Scruffy. Hey, yeah.
yeah, that's the thing, right? And even some of like the hardcore maximalists were like, that's pretty cool. And I was like,
Mm,
that's right. And I was talking to Michael Dunworth about this in Murrah. What I love about this inscription thing, and let's go back to what I was talking about before about human psychology. Bitcoin is our golden record from 2009 onwards. All human behavior and all the economics and all the dick pics and all the wedding photos and all the passed away dogs, they're all going to be stored on this 500, at the moment, it's almost 600 gigabyte hard drive that you can ship off into space and tell the aliens all about what we did. It is the golden record. It's going to be, there's going to be social, what do you call them? Historians or whatever, combing through the Bitcoin blockchain, looking for all the weird and wonderfuls that humanity goes through from here into infinitum.
exactly. This is the ultimate record, and it's genuinely immutable.
And even Albanese or the government can't change the bloody thing, right? So it doesn't matter who you are, you can't remove my dog from your node. And I love that.
Wow, that's epic, man. Last thing I wanted to touch on, if we've got time still, is just the other cryptos. And, you've obviously, with Glassnode, you guys do a little bit of work having a look at stablecoins and ETH. Interested to get your thoughts on kind of what the state of play is in terms of crypto. Do you think it's going to have another bull run? You had a really good video that I remember watching and not understanding it all, but kind of, how ETH scored a bit of an own goal by shifting from proof of work to proof of stake. Just talk to us a little bit about kind of what's the landscape in quote unquote crypto, and how's this going to work, and what do you see happening in the coming sort of 12
Yep.
to 24 months?
Yes, I mean, at the highest level, I think if you objectively look at the market, Bitcoin is the first obvious product market fit, right? Unflipped, and I would expect will continue to be unflippable, and more than 50% of the entire market cap, and that includes all the inflated token values, right? So Bitcoin real dominance. If you There's a bunch of metrics I use to track it, but dominance is well in excess of 65, 70% on any rational, meaningful way you want to measure it. The other primary use case and application for blockchain technology, without a shadow of a doubt, anybody that argues against this is just objectively wrong, is stablecoins. Tether on Tron, I don't know if people know this, Tether on Tron is responsive. You take all the USD value of Bitcoin that's moving, all the USD value of ETH that's moving, and every single stablecoin, Tether on Tron accounts for 41% of all that value
Yeah,
being
it's
transacted all the
amazing.
time. It's incredible. And Tether is going to dollarize the world. And I was talking with Michael Dunworth about this. My view on Tether is you don't get to 90 billion without a tap on the shoulder from the US government. They are all in bed with each other. And Tether has essentially been tasked with buy our bonds, because our government has a whole lot of bonds we need to sell. We need someone to
Mm,
buy these things.
yeah,
Please buy our bonds and we will not squash you like a bug. And your job is to give dollars to every country in the world. That's it. Just let the
yeah,
market adopt Tether. This helps people in ways that you simply can't understand, right? Us in the West, we just can't understand what it's like to see your bolivars get devalued month after month after month. Having access to US dollars on the blockchain is incredible. It's an incredible offering. Now, you mentioned that video. What I touched on there is that when you actually peel back the onion of how, let's just call it the DeFi ecosystems work,
Yeah.
they are 100% reliant on stablecoins. The system simply doesn't work without centrally issued USDC and Tether. That's what people borrow. That's their, you know, basically the world doesn't run on ETH collateralized loans. It runs on people depositing a crypto asset and borrowing some kind of token, a stable coin. And they
Mm.
use that for speculation, for leverage, for all sorts of stuff. Now, sure, someone could borrow their own asset again, but is censorship resistant? No, because if Tether says, "Hey, sorry, the US government's got their throat on their foot on a boot on our head. We cannot allow you to use these DeFi protocols." Switched off in one go, right?
Mm.
So, do you need a fully decentralized blockchain to do any of this stuff? No, you need Tron, a centrally managed blockchain, which is as decentralized as the thing it supports, which is stablecoins. So at the end of the day, I look at all these things and stuff and I go, at a technological level, you can't compete with Bitcoin. And my argument against Ethereum is what they've done is a very big mistake, is that they tried to be money. There's arguments as to why you would want to do that, but you ain't going to win. And that's the problem. In order to achieve the money use case, they had to sacrifice the gas use case. And that's why
Mm.
fees are 30, 40, $50 because the system doesn't scale. So in order to scale, they've built all these layer twos. I don't know if you've ever used these layer twos.
No.
User experience ain't going to happen. Whichever engineer thought that this was going to happen is wrong. Not going to happen, guys. So they've created just orders of magnitude of complexity to try and fix the problem of the system doesn't scale. And it's not going to work. The other side of the equation, you've got these Solanas and all these new coins. Now, look, my view is that there's no question we're going to have silly season again. Alt season not going anywhere. I think even the most devout Bitcoin maximalists will understand that humans love to gamble and speculate. It's going to happen, right? So put that aside. The interesting thing that I've learned recently is that the way to think about Ethereum is it's a single core computer. Solana is trying to build a multi-core computer. Now, there's all sorts of trade-offs it has to do to achieve that. But essentially, when I look at that landscape, to me, it's like, I mean, single core, multi-core. It doesn't matter if they're useful. The market's going to bet on these things irrespective. Gee, you got some serious tech debt to get through, Mr. Ethereum. You're in a really tough spot where you're not money like Bitcoin. You're also not fast like Solana. You're in a bit of a valley of you don't really have a great deal going for you aside from liquidity. So I just simply look at the crypto universe as an interesting experiment. You get to see all these like market dynamics. You get, at the end of the day, we get to watch in fast motion how Wall Street got to be as corrupt and crooked as it is, because we're watching them rebuild it bug for bug, piece for piece, brick for brick. The crypto ecosystem has just rebuilt traditional finance in all of its glory. And we've got to see that like fast track from A to B of how Wall Street got to be the way it is. And I mean, look, you can have your ideological arguments. I find that fascinating. Just as a simple engineer, as an observer, to me, it just blows my mind. And you can look at all the trade-offs and say, look, you still need centrally managed stablecoins. So Tether on Tron, the second biggest use case in all of crypto aside from Bitcoin. And it's a very, very long tail after that of very questionable concepts and ideas, but the
Hmm.
market likes to try this stuff.
That's great, man. And tell me this, like, why do we even need a blockchain if it's so centrally managed? Like, couldn't Tether just come and go like, listen, guys, we're going to issue Tether on its own, proprietary blockchain, because we know Justin Sun, who likes to plonk his face all over billboards, is ultimately the one pulling the strings there. And it's kind of just nobody cares about decentralization. It's just it's obviously, I mean, that's how you achieve,
I mean, at the end of the
12.
day, Tron is just a big database, right? So I actually think it's a very, and again, there's probably a lot of people who would spend more time looking at this stuff, right? I'm a cursory observer. I just find it interesting from the sidelines.
Yeah.
But my view is that the market has adopted Tether. Why? Because it's kind of anonymous. It's kind of got that air of like, people didn't adopt USDC. US VCs did because it's like, oh, this is a very compliant stablecoin, right? But
Yeah.
Tether's kind of this like, we're a bit shady, we're a bit spooky, like, we're kind of in court with it, with the government, but we're also not. Like, do we have the coins? Do we not? Do we have the backing? Do we not? The market adopted it because it's a little bit rogue, even though it's not. Tether has actually frozen more coins than USDC has for the
Wow.
US government. So Tether is actually more compliant than USDC. But at the same time, you've got traditional finance being like, it's a fraud, it's a Ponzi. It's like, It's a fraud and a Ponzi that the US government controls, but they can't see that second and third derivative of what's going on. So the market adopted Tether because it looks decentralized and it looks shady. And I think people underestimate that human component of why did they adopt it in the first place? Because they didn't adopt USDC, they didn't adopt BUSD, they didn't adopt any of these other ones. And why do you need a blockchain? Because it gives that air of, I mean, it does the job. It does the job of what Tether is out there to do. So I think that's kind of the big picture of it. It's a
Yeah.
human psychological thing. It's a technological thing, and it's just good enough to achieve the goal. And it's already hit escape velocity. So that's kind of why it works.
Yeah. And I do echo your sentiments in relation to the value of stablecoins. It's totally undeniable. I mean, coming from Africa, you do anything to get your hands on US dollars. And my wife's got family in Zim, and you just don't have any money in the bank. It's an absolute waste of time,
Yep.
because even when you had a US dollar account, one day the government goes, all right, don't worry, guys. We're going to convert your US dollars to Zim dollars, but they're 1-to-1. And then the market goes, yeah, not quite.
Yep.
And then you're totally debased. So nobody wants to put their money in the banks, and everyone just wants to get the hold of USD. Never mind the people that don't have access to banks, full stop. So, it's
It's a big
undeniable.
path dependency as to how we get here. It's just
Yeah,
it's just the way the cards fell, and as a result, that's just the way it is. And yeah, that's why I find it so fascinating to observe, because it's just we got here because we did.
totally. And what I would tend to advise people in South Africa is, because the rand melts by about 8 to 10% per annum against the US dollar, is that if you've got savings that are like, let's say your 1-2 year, maybe 3 year savings, consider doing something like, oh God, it's hard to say, but Tether on Tron. I was actually always going to say like something like a USDC. You might say, yeah, there's sort of custodial risks and blah, blah, blah. Yeah, absolutely. Like, make no mistake. It's, you could get rugged anytime, but
Hmm. You
you've got
are getting
rands.
rugged with a rand.
The rand is
Uh,
already rugging you.
choose your own rug, right?
It's
This
a
and
slow rug.
the trade off is that if you want the unruggable, you have to deal with the volatility, which is Bitcoin. So
Yes,
it's, however, that will also start to change as all these big players get involved, and just maybe that reduction in volatility. I mean, Bitcoin hit 30% volatility, which is kind of probably a number that doesn't mean much to you, but it's like historically 100%, meaning it moves 100% over a whatever period you're looking at.
mm,
Here we're looking at, or annualized, it got down to 30% over, up until October. So the volatility is like a third of what it used to be. It's going to become much easier to use and hold, right? Based on those metrics. So, but that's the cost of the unruggable, is that you need to deal with the volatility of the asset.
totally. Yeah, I've really enjoyed this chat. Yeah, we've chatted about on-chain price stuff, culture, shitcoinery, the tokens, all
Yep.
the inscriptions and whatnot. Yeah, really a tour de force. And yeah, have you got any other thoughts in your mind that you'd like people to know about, or
No,
things
man,
that you're thinking
that's
about?
pretty much it. I mean, it's an exciting time to be in Bitcoin. I mean, like I can feel the positive energy of innovation. People are building stuff. People are arguing. People are debating. It's you probably notice that through the bear market, things get really dire, and everyone's just like fighting over whether it's orange or bloody burnt orange. It's just tough. But now we've got some stuff. There's actually some intellectual rigor coming back into it. People are discussing interesting things. Market dynamics are changing. New money's coming in. TradFi hates us again. I love it. You love this kind of stuff. This phase when TradFi just despises everything about Bitcoin is the best time, because they just come out with all these zingers that just show them as the absolute buffoons that they are. They have no idea how this system works.
Mm.
And I mean, the one that's going on at the moment is that Bitcoin isn't scarce because it's infinitely divisible. It's the
Oh,
pizza argument, right? How many pieces of pizza can you slice up, and that makes you can feed the world? I just love it because Bitcoin challenges everybody's thinking. And that's what makes it so fascinating, because everything is probably wrong in a Bitcoin context. And it forces you to really dive deep to go, all right, well, where the truth actually is. And it's a big journey.
totally. I tweeted something out earlier, and it's not an original thought. I even said this. I can't remember who said it. I'd give them credit, but it's more of an ego test than an IQ test,
Yes, it
because
is.
you really have to cast aside some of these preconceived ideas about how the world works. And clearly, Pizza Lady was not prepared to revisit her assumptions of everything. Because that question is the first question my dad asked me. And I explained it to him, and he was like, okay, that makes sense.
The divisibility.
Simple. Yeah.
Yep.
Simple as. Yeah. And how can it be scarce if you can cut it up into all these pieces? Like, well, explain to him the story, and he's like, oh, got it. So
Yep.
you've got to be open, you've got to ask the questions, and you can't come into the room as if you know anything, everything rather, shall I say. No, what a
Yep.
wonderful time. We went through this period, and that's why, like, when I think about taking a slice of the top, I kind of go, whew, no, I still want to see some real gains, because I felt that this bear was quite painful. It really stung. It's not as if I bought at the very, very top. Obviously, a lot of us did, but that's not my cost base. But fuck me, it was rough. I mean, and
Yes, it was a
it
nasty bear market on
yeah,
many levels. And
yeah.
back to the original point that we talked about, there was a lot of big forced sellers. And
Mm.
strangely enough, this is the great irony, and I believe it's why Bitcoin, for whatever beings are out there that just love having a game with us in the simulation, this is why they dragged Gary Gensler through the mud, because the reason for the entirety of that disaster that was 2022 was because GBTC, the Widowmaker trade, had so many forced sellers. Every man and his dog who blew up last year was because of GBTC. If that was an ETF back in 2020, none of that would have happened. So I believe that is why Gary Gensler got dragged through the mud right at the final approval, because Bitcoin had to remind him that if you had have just done your job and protected investors by approving that damn ETF, none of this would have happened.
And even got the announcement right, you would have protected investors even more.
It's just
You fucking buffoon.
oh, everything is beautiful. I just love it. Dragged the regulators and TradFi right back into our world and said, "Welcome to the chaos. You want to play this game? You're going to play it with us."
Yes. Who inscribed something like, Gensler on the brink of approving a second
Yes,
ETF?
again, yeah,
That's
exactly. What
brilliant.
a great. I mean, again, what a great inscription. I think it was not returned, but yeah,
Yeah.
love it.
Awesome, man. Well, I'm looking forward to catching up at Bitcoin Alive. I believe you'll be delivering a presentation
Absolutely,
there. And for anyone who hasn't got the tickets or thought about coming, it's an awesome conference. And I think this year is going to be bigger and better. I had a chat recently with Dylan and Chris, and that episode will be coming out pretty soon. But yeah, super pumped and can't wait to get back to Sydney. Love Sydney and love its energy. And